Hey everyone, it's Julie here with TipRanks, and today we're taking a look at 3 big banks with recent analyst upgrades. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at 3 big names in finance that in recent days have had analysts upgrading their ratings on the stock to a buy. We're going to take a look at these companies, what it is that they do, and what has these analysts changing their tune to more bullish. Just before we get into these 3 stocks, this is a friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel. You can download the TipRanks mobile app by following links in the description down below or by scanning that QR code on your screen. Now let's dive right into these 3 bank stocks. First on the list, we're taking a look at Bank of America. They trade under the ticker BAC, currently priced around $46 per share. The bank has climbed over 37% over this past year, and in the last 6 months is up 14.5%. Bank of America is one of the largest financial institutions in the United States, offering a wide range of banking and financial services. While their operations span globally, the bulk of their business is in the United States, providing consumer and business banking products, offering services for corporations, governments, and institutions, wealth management, and global markets, engaging in trading in equities, fixed income, and currencies. They'll be sharing their next quarterly report in just over a week on January 16th, and this does follow their third quarter in mid-October that came out with both an earnings and revenue beat. For their Q4, analysts are anticipating earnings per share of 77 cents, more than double last year's. And for their third quarter, they reported earnings per share of 81 cents, beating estimates by 5 cents per share. Revenue also beat expectations, coming in at $25.3 billion, which was $70 million ahead of estimates. Just yesterday, an analyst from UBS upgraded their rating on Bank of America to a buy, saying the stock was overlooked. They said that the street has not yet recalibrated their earnings per share power from higher rates for longer in the post-election landscape of deregulation. The firm says Bank of America is an overlooked beneficiary of the Basel III endgame softening, as not only would the bank benefit from a less onerous final capital rule, but it has the strongest inclination among the money centers to buy back stock today. They think the bank could buy back $18 billion of stock in the next year. And just one day before that, we also had an analyst from HSBC upgrade their rating to a buy as well. Altogether, Bank of America has 18 current ratings, coming in as a strong buy with 16 buys and 2 holds. The average price target of $52.50 implies an upside potential of nearly 14%. Looking at some of those ratings down below, we do have a low-end price target of $44 back from October with a downside of 4%, while our high-end price target comes in at $58 for an upside of 26%. Our second recently upgraded bank stock is Citigroup. They trade under the ticker C, currently priced around $73 per share, having climbed 41% over the past year, and they're up over 15% in the last 6 months. Citigroup is a global financial services company that was founded in New York back in 1812. They are known for their extensive global network, serving clients in over 160 countries and jurisdictions. Of course, they offer a wide range of products and services, including banking and lending, investment banking, wealth management, global markets, and transaction services. They'll also be sharing their next quarterly report next week on January 15th, following an earnings and revenue beat for their third quarter back in mid-October. For their fourth quarter, analysts are anticipating earnings per share of $1.22, a big swing from last year's loss of $1.16. For their Q3, they reported earnings per share of $1.51, beating estimates by 20 cents per share. Revenue came in at $20.3 billion, beating estimates by $500 million. A couple of days ago, an analyst from Barclays upgraded their rating on Citigroup to a buy, and just yesterday, an analyst from Morgan Stanley named the stock as one of their top large-cap bank stock picks. The Barclays analyst said that despite the recent run-up, large-cap banks can continue to outperform the market into 2025 as earning growth accelerates. The firm expects Citi to amplify these drivers. After hitting its revenue and expense targets in 2024, their forecasts continue to improve into 2025. And Morgan Stanley said that their estimate is above the consensus for the large cap bank group as the firm expects capital market beats in the quarter, positive commentary on 2025 pipelines, and the benefit of a steeper curve to drive up 2025 guidance. They've identified Citi as their most preferred stock into earnings and their top pick among the large cap banks with 43% upside. And also yesterday, Bank of America bumped up their price target by $5. While Citigroup has gotten all buy ratings from Wall Street recently, overall it does come in as a moderate buy, with 18 ratings breaking down to 13 buys and 5 holds. The average price target of nearly $82 implies an upside potential just over 11%. Looking at those ratings down below, we can see all those recent ratings coming in as a buy, but from a couple of months ago, we do still have some holds showing on here. Our low-end price target is $69 for a downside of 6%, while our high-end price target comes in at $110 for an upside of nearly 50%. You know the drill, guys. If you've made it all the way to our third stock, then this is your nudge to make sure you hit that thumbs up button. Last but not least is none other than JP Morgan. They trade under the ticker JPM, currently priced at $243. They've climbed 43% in the past year, and in the last 6 months have gained 19%. JP Morgan is one of the largest and most influential financial institutes around the globe. They are known for their extensive scale and scope, serving millions of customers and many of the world's most prominent corporate, institutional, and government clients. They are a leader in financial transaction processing and asset management with a strong presence in investment banking. They're often at the forefront of financial innovation, technology in banking, and global economic influence. And just like the others, they'll also be reporting their earnings next week on January 15th, following an earnings and revenue beat for their third quarter back in October. For their fourth quarter, analysts are anticipating earnings per share of $3.99, ahead of last year's $3.04. This follows their third quarter earnings per share of $4.37, beating estimates by 38 cents per share. Revenue came in at $42.65 billion, beating by over $1.2 billion. Just a couple of days ago, the stock was upgraded to a buy at HSBC, and a few days before that was also upgraded to a buy by Wolfe Research. Wolfe Research said that they're getting selective as valuations look stretched after a banner year for financials. They're most positive on names with secular growth stories and exposure to Trump tailwinds. They say that JP Morgan's net interest income guidance is conservative, its higher expense risk is well telegraphed, and share gains are unmatched. The firm prefers JP Morgan over the trust bank as a way to play quality and defense. And yesterday, Bank of America increased their price target on JP Morgan by $20. Driven by a re-acceleration in earnings per share growth and an improving regulatory backdrop, they expect JP Morgan shares to outperform the S&P 500 in 2025, which they note would mark the fourth year in a row if that ends up being the case. They said their excess capital positioning and a liquid balance sheet offer it significant strategic flexibility to navigate a worse-than-expected macroeconomic scenario. With 16 current analyst ratings, JP Morgan does come in as a moderate buy, with 10 buys, 5 holds, and even 1 sell. The average price target comes in at $253, which would just be an upside of 4%. But looking at some of those more recent ratings, we see some higher upsides. Our high-end price target is $304 here from Barclays for an upside of 25%, while our low-end, no surprise, is the sell rating here at $200 for a downside of nearly 18%. So that is a quick look at 3 big name stocks in the finance industry that analysts have recently upgraded their ratings on. Let me know your thoughts on these stocks, plus the finance industry overall, and how you think it's going to perform the year ahead. I always love hearing from you guys. Keep in mind, these videos are never a suggestion to buy or sell any specific stock, just sharing what those Wall Street analysts are up to. So please make sure you always do your own research and due diligence. Thank you guys so much for watching. Have an awesome day, and I'll see you back here next time.